I would do it exactly the same way if I were doing it in the investment world. I mean, if I were getting out of school today and I had $10,000 to invest, I'd start with the A's. I would start going right through companies, and I probably would focus on smaller companies because I would be working with smaller sums and there's more chance that something is overlooked.
I do think if you're working with very small amounts of money that there almost always are some significant inefficiency someplace. I've mentioned to some people when I started out, I actually went through all of the Moody's manuals and the Standard & Poor's manuals page by page, and it's probably 20,000 pages, but there were a lot of things that popped out, and none of them were in any brokerage report or anything of the sort. They were just plain overlooked, and you could find out about them, but nobody was going to tell you about them.
I've been taught by Ben Graham to buy things on a quantitative basis. Look around for things that are cheap. And that I was taught that, we'll say in 1949 or 50. It made a big impression on me. So I went around looking for what I call used cigar butts of stocks. And the cigar butt approach to buying stocks is that you walk down the street and you're looking around for cigar butts and you find this on the street, this terrible looking, soggy, ugly looking cigar, one puff left in it. But you pick it up and you get your one puff. Disgusting, you throw it away, but it's free. I mean, it's cheap. And then you look around for another soggy, one puff cigarette. Well, that's what I did for years.
Back when I started, I had way more ideas than money, so I was just constantly having to sell what I thought was the least attractive stock in order to buy something that I just discovered that looked even cheaper.
So, what was Buffett's approach to valuing stocks? Net current asset value. Net working capital.
If I were working with a small amount of money, the universe would be huge compared to the universe of possible ideas I work with now. You mentioned that 56 to 69 was the best period. Actually, my best period was before that. It was from right after I met Ben Graham in early 1951. But from the end of 1950 through the next 10 years, actually returns averaged about 50% a year, and I think they were 37 points better than the Dow per year, something like that. But that I was working with a tiny amount of money, and so I would pour through volumes of businesses, and I would find one or two that I could put $10,000 into or $15,000 into that were just ridiculous. They were ridiculously cheap, and obviously as the money increased, the universe of possible ideas started shrinking dramatically.
If I was running $1 million today, or $10 million for that matter, I'd be fully invested. Anyone who says that size does not hurt investment performance is selling. The highest rates of return I've ever achieved were in the 1950s. I killed the Dow. But I was investing peanuts then. It's a huge structural advantage not to have a lot of money. I think I could make you 50% a year on million. No, I know I could. I guarantee that. Warren Buffett.
So I would say if you're working with a small sum of money and you're really interested in the business and willing to do the work, you will find something. If you were, there's no question about it in my mind. You will find some things that promise very large returns compared to what we will be able to deliver with large sums of money. Now, I did a lot of work in the earlier years just in getting familiar with businesses. And the way I would do that is I would go out and use what Phil Fisher called the scuttlebutt approach. I'd go out, I'd talk to customers, I'd talk to maybe ex-employees in some cases, I'd talk to suppliers, everybody. Every time I'd see somebody in an industry, let's say I was interested in the coal industry, I'd go around and see every coal company, and I'd ask every CEO, if you could only buy stock in one coal company that wasn't your own, which one would it be and why? And you piece those things together and you learn a lot about the business after a while. And the funny thing is you get very similar answers as long as you ask about competitors. I'd say if you got a silver bullet, and you put it through the head of one competitor, which competitor and why? You'll find out who the best guy in the industry is in that case, or the one that's coming up.
Before moving forward, we all can agree that investing can be stressful and challenging, especially when stocks you own go down 30 or even 60%. In those moments of pressure, you need a positive distraction, simple little things that can put a smile on your face. We created funny gifts for investors that should instantly make you or someone you care about feel better. Don't let negative emotions and fear influence your decisions. Click the link in the description below.
But that's the only way to do it. I mean, you have to buy businesses or little pieces of businesses called stocks, and you have to buy them at attractive prices. And that advice will be the same 100 years from now in terms of investing. That's what it's all about. And you can't expect anybody else to do it for you. I mean, people will not tell you about wonderful little investments. It's not the way the investment business is set up. You've got to follow your own. You've got to learn what you know and what you don't know, and within the arena of what you know, you have to pursue it very vigorously and act on it when you find it. And you can't look around for people to agree with you. You can't look around for people to even know what you're talking about. You have to think for yourself. And if you do, you'll find things. I'll leave to you the fun of finding them yourselves. I mean, it'd be terrible to spoil the treasure hunt. And the truth is, I don't look for them anymore. Every now and then, I'll stumble into something just by accident. But I'm not in the business of looking for them. I'm looking for things that Berkshire could put its money in, and that rules out all of that sort of thing.
If you want to learn more about how to invest, check out one of the videos you see on the screen.